Hello friends, in the series on the income tax cases, today we will discuss a case which is based on the deduction of section 36 subsection 1 clause II. Generally, this section is not in very much use and we see a very less number of cases on this section, but this section is very important as far as the corporate assessees is concerned. Section 36 subsection 1 clause II allows the deduction of commission and bonus paid to the employees in a condition when this bonus or commission is not to be paid to the employees as profit or dividends. Meaning thereby that if some amount is to be paid as profit or dividend to the employees, then it should not be given to the employees as commission or bonus to avoid dividend distribution tax, because if some profit is distributed or dividend is given, then there is dividend distribution tax. This issue has been taken by Ahmedabad ITAT D bench in the case of AMI Life Sciences Private Limited versus Assistant Commissioner of Income Tax. This case is reported in 114 ITR short note 7 and the judgment came on 15th July 2024. The case relates to the assessment year 16-17. The facts of the case are like this. In the present case, the assessee is in the business of manufacturing pharma intermediates. During the year, the assessee has paid a commission of rupees 52.34 lakh to a director who was one of the 6 directors of the company, and that director was also a shareholder of 32.78%, and there were total 30 shareholders. In the present case, the commission has been paid only to this director and only to this shareholder. The person to whom the commission was paid was the shareholder as well as the director of the company. There were 30 shareholders and there were 6 directors on board of the company. The book profit of the company was 6.68 crore and the commission paid comes out near about 7.83% of the book profits of the company, and the director has also taken that commission income into his income and was filing a return of a magnitude of rupees 2.74 crore and was paying a tax of rupees 94.13 lakh during the assessment year. This was the facts of the case. But when the assessment proceedings were going on, the learned assessing officer was of the view that in the present case, the payment of rupees 52.34 lakhs should not be allowed to the assessee under section 36 subsection 1 clause II. He was of the view that the commission which has been paid to the director is for the avoidance of the dividend distribution tax, and no reasoning was given why this is for the avoidance of dividend distribution tax, simply because it has been paid to an employee. So the allegation under section 36 subsection 1 clause II was made, and contrary to that, the assessee has sufficiently proved that the services have been availed from that director and this amount has been paid for the services rendered by that director to the company. So when the matter was heard by the tribunal said that in the present case, the addition or the benefit of section 36 subsection 1 clause II should not be denied to the assessee just on the basis of presumption of tax avoidance. There was second issue also in the present case. The assessee has incurred research, some expenditure on the research work, and this expenditure was not in the nature of capital expenditure on land and building. The books of accounts of the assessee were complete, they were not rejected, and the assessee has also furnished a certificate of the chartered accountant. But the learned assessing officer relied on the Department of Scientific and Industrial Research report and denied the weighted deduction under section 35 subsection 2AB only on the basis of the report of Department of Scientific and Industrial Research report. When the matter was heard by Ahmedabad ITAT, the tribunal said that in the present case, since the books of accounts has not been rejected, there is no lacuna in the books, and since a certificate of CA has been produced, so just on the basis of scientific and industrial research report, the reduction of the weighted deduction is not justified. So the full deduction under section 35 subsection 2AB should be given to the assessee. At the end of this video, once again I am repeating the name of the case. The name of the case is AMI Life Sciences Private Limited versus Assistant Commissioner of Income Tax, and this case has been reported in 114 ITR short note 7. The matter has been decided by Ahmedabad ITAT D bench, and the date of the judgment is 15th July 2024. Thank you, friends.